Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, October 22nd at about 3:45 p.m. Eastern. Well, the NASDAQ and the S&P 500 were higher earlier today as robust updates from Amazon and Intel lifted beaten down mega caps, while investors earlier in the day drew comfort from data that showed inflation rose largely in line with expectations. However, as the day progressed, the Dow continued to move lower. Actually, small caps moved lower, and during this afternoon, the S&P 500 decided to take a dumpster dive. So on that note, let's go on to three charts that could give us some insight into the week to come. Okay, so you can see what happened here. As we usually do, the first chart we look at is a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. So when I captured this chart today, the SPY was trading at $409.36, 14% below its all-time highs that took place in January of 2022 at $479.98. So right now, as you can see, well, let's go back here as we usually do. Let's go back and look at the July high, the relative high at least. On July 27th, actually, the SPY gapped up here to an intraday high at $459.44. And we had mostly an uptrend in the beginning of the year that was really nice up until that July 27th gap up and then fall. And then, as I've told you before, this remains the relative high for quite some time. And in July, then the SPY started to drop. It dropped below the 20. And see how before in this year it had used the 20-day moving average for support. But after that July 27th gap open, it started falling. It fell through the red line, the 20-day moving average, fell down through the green line, the 50-day moving average, all the way down to August 18th, where it gapped down this time to open at $433.37. Now from there, it was able to rally back up, to a September high here of $453. And if you want to, we can note that back here in July, when the SPY gapped down, it opened at $453. So you can say we make a lot about support and resistance, but there really is such a thing. So price in this case rose up in August and September, tried to get over that gap down high or gap down opening, but it couldn't do it. That was 453. So it could not do it. So it moved back down through the 50-day and the 20-day. Then tried to move back up here in September to go higher, but ended up making a lower high, and then dropped all the way down to the 200-day moving average, which at the time was at 420-421. So now we did have a positive rally the week. Strangely, the first day after the weekend of the Israeli-Hamas war began, we did have a pretty strong rally that week, but price was stopped by the 50-day moving average. And note that when you see a moving average moving down as opposed to moving sideways, if a moving average and a strong one like the 50-day is moving down over price, at least price comes up, sometimes this moving average will be the resistance we can call a ceiling. Price just can't get over it. And that's what happened here. It rolled back over here. It went up to about 438 below the 50-day moving average, then rolled over, dove down below, which we didn't want to happen, dove down below the 200-day moving average, and continued to fall down here to today's current price at $409.36, just a few minutes before the close, and it closed, I think, even a little lower than that. So now some of you all who are technical analysts are going to ask about the Head and Shoulders, and I'll tell you quickly that we talked about earlier a few months ago and even recently, because we wondered if one was happening here. So we had what I'm going to call a double shoulder here, the head kind of a double right shoulder, and then fell down. We have support here. A couple of places we can draw the neckline. We can draw it like that, which I think is probably the best place to draw it. You could try to draw it a little higher up, but this is where the midpoint comes to, from the head down to the right shoulder. So if you do, I'm just showing you this, and Head and Shoulders is a top reversal pattern. We did see kind of a Head and Shoulders pattern here. We had this fall down to the 200, then this rise up to the 50-day, but this could be called the throwback rally right here, because Head and Shoulders usually have a throwback rally after price goes down below the neckline and falters. When it finds support, a lot of traders come in to buy because they are assuming there will be a throwback rally, and there was one here. We can call that if you want to. Now the measured move here would take the SPY down to about 405, 403 to 405, and of course we know that's measured from the neckline. We take the measurement from the neckline to the top of the head and then transfer this measurement from below the neckline, right at the neckline below it. And if you do that, the measured move comes to about 405. Don't worry about it, and it's not something that has to happen, but that is how Head and Shoulders work, generally speaking. So we do have, I was going to say, we do have support around 413, 415 from back in May. Oh, I'm not drawing a straight line, am I? From back in May, but you can see how the market was all over the place, but consolidated too. So there is support in here. If I can draw this line straight, I don't know if I can, but you can see how in May there's plenty of consolidations and support. Potential support is what we call it, because we can't count on it. We just see that it was there. There was a lot of again, consolidation in this arena in May in the 415, actually 405 to 415 area. So that is something that we can think about. There's a lot going on here. As you know, we're going to continue through earnings season next week. Apple will announce earnings next week. We are going to have the FOMC announcement on Wednesday. And as you all know, sadly, the Israeli-Hamas war still adds uncertainty to the globe. Still, as I reminded you last week, November, which will start next week, December and January are seasonally the three most positive months of the year. So my fingers are crossed that that will happen again this year. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that follows our NASDAQ 100 index, very important index that encases the top 100 non-financial companies by market capitalization in the, as I said, the NASDAQ 100, including companies like Apple, Meta, NVIDIA, Alphabet, Tesla, that whole group. Now, the NASDAQ was down today as well, but it closed a little higher than yesterday's close, so we'll take some comfort from that. When I captured this chart today, the Qs were trading at $344.31. And it's about 16% below the all-time highs that the NASDAQ 100 had in November 2021 at $408.71. Now, you know that we did enjoy, you can only see from April on here, but we enjoyed a wonderful uptrend this year in the first half of the year. And it ran up from January lows at 262, you can't see, to mid-July relative high right here at 388. And that is when that wonderful uptrend party was over. From there, it fell down. Tried to keep above the 200-day moving average as it had earlier in the year, but couldn't quite pull it off. And then the Qs rolled over at this point in early August down to this gap open here on August 18th to $354. Then it managed to move up to 381. Hold on here, I'm losing my place. And then it's up to 381 on September 1st is what I meant to say. And then slid down to $351.36 on September 27th, which was right down here. So a very slightly lower low, but we're making lower highs here if you notice. Then it consolidated for a couple of weeks here at 354 level. And then on October 6th, we saw the same positive day we saw on the S&P 500, and everything was just started to break and feel good. That was the Friday before the Israeli-Hamas war began. Of course, we didn't know, but the market did manage to move up during that following week. It moved up through the 20-day, the 50-day, and we thought, but even though the war was starting then, and it could not continue. So then it climbed to 374 on October 12th and then started falling. So the Qs hung in there pretty well. They did start falling and they headed down toward the 200-day moving average. And again, today we're closing at right around $344. Now, we had talked previously about a triangle forming. And indeed, the triangle broke. Triangles, when there's a lower highs, and maybe a pretty good level for the lower channel, or the other way around. Maybe it's lower lows, but the highs are staying in there. The triangles break. They always break, and you'll see which way. And this one has broken this week, as you can see. That was our triangle, and price broke out to the downside, obviously. So now we're headed down toward the 200-day moving average, which is coming in at $339.27. And again, one thing I'll add to that, triangles are pressure cookers. They're definitely pressure cookers. So when they break, they can fly much higher or much lower, and you always want to be on the right side of it for sure. So again, we're moving more deeply into earnings season. We have a lot going on in the world. We're looking at support here at 339 for the QQQ. 350 may offer some resistance as what was support, then offers resistance once price goes below it. So we've got that resistance there, but hey, next week if things start turning around a little bit, there's no reason the Qs can't start higher. I am personally going to sit and watch. I learned a long time ago that I do not have to trade. Sometimes the sidelines are a good place to be. So let's go on to the next chart and see what we think of that. So what I will be watching next week in the form of trades is I'm looking at the Global X Silver Miners ETF. The silver is a potential store of value, and it has industrial uses, particularly in electronics. It has 36 holdings. Now, what I need you to know is that gold and silver, they don't trade along with the market. They are defensive moves, and silver has had a tough year this year starting in April. Price came down. It had a high back here in April at $33.24, and then it gradually started falling and fell down to 25 in July. We can see down here the lows. Then it ramped up very quickly to $28.47 right here on July 18th. Then it couldn't hold that. It moved up actually over the 20-day, the 50-day, and the 200-day moving average, and then fell back down to the July lows, back down to around 25. Then it bounced back up and then made a couple of moves up and back. Then we had two lower highs, and then down to a low here of 22.57 on October 4th. So we had the rise down, the fall down here to 22.57. Then it rose up to 25.72 on October 18th. So now it's minced back off down a little bit as the market tried to go up, but it couldn't happen. And it fell back down below the 50-day moving average, and the SIL is now sitting on the 20-day moving average, closed near the highs of the day at $24.64. So again, gold and silver trade independently of the markets in the general direction, and silver has a lot of industrial uses, as I said. So I'm going to be keeping an eye on this. If in the coming week the SIL can stay above the 20-day moving average, which is coming in now at $24.09, so just call it 24. If it can stay above this line, I want it to stay fairly positive. I may add a small position to my trading portfolio, and I'm going to have my stop down here at $23.15. If and when the SIL moves above this high here, so let's call it 26. If and when the SIL moves above 26 and can stay above it for 3 trading days, I will add to my position and trail my stop. So if you want to trade next week, it may be hectic, it may be great, we don't know yet, but you may want to keep an eye on the SIL in the coming week. Now, if you'd like to become a more successful trader, this is the perfect time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. You can also learn how to swing trade successfully, which is a really good skill to have in this particular market. How to trade the trend for profits, one of my favorites. How to read charts, great for novices or those who want to brush up. 3 winning setups, wonderful for short-term trading. Bottom fish like a pro, and many, many more. These programs all show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all of my online training courses by going to the link on this screen or simply clicking on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.